Welcome back to Capital Market live on Channels Television. Before we continue with our discussion, let's quickly look at the markets offshore, where the African markets continued to witness sell-offs this week as investors watch the global trade wars between the United States, China, UK, and India. The US Fed twice increase in rates this year, as well as a possible hike in the United Kingdom in rates now informed the bearish sentiment for the week. Looking at the Eurobonds for sub-Saharan Africa, sovereign Eurobonds performance was also mixed as yields on 16 of 29 instruments fell week on week against the backdrop of a higher interest rate environment in the United States, as well as the strengthening dollar and higher treasury yields. Sell-offs across the emerging markets assets has also persisted this week. That is what analysts and traders are noticing across board. So let's continue our discussion with the research analyst we have as our guest from United Capital, Wale Olusi. Thank you for standing by. And now let's continue with the discussion around the equity markets new structure, where in terms of distortions that you have by reporting now from different houses, how will this new structure resolve this difference?
Well, I think that's one of the things they are trying to work on. It's definitely going to harmonize it. The imbalances bit of the whole new structure, I'm sure, will be part of what we address. That when you have orders, I think the market makers will come together. They'll look at this deal and look at the size of, the liquidity they need to create to mop up, the excess in the market. I'm sure the technicality, if it is efficient, the way they have designed it, should clear off all of those contrasting numbers. Definitely.
Anyways, we're yet to see this new structure then playing out in the market. But are you confident that brokers and dealers will be receptive to this new development?
If it's going to help them make more money, definitely.
Really?
They should be receptive to it.
Okay, so let's move on to other things now. The World Cup tournament is going on, and this week you folks at United Capital published a report as to how the Nigerian equity market over the years has reacted to the historic football records and participation of the Super Eagles. Give us an insight into this.
Okay, so I think it's more of a correlation analysis rather than an impact analysis. Okay, it was informed by the ECB, the European Central Bank. They did a study in 2010 during the South African, the World Cup hosted in South Africa in 2010, about 15 exchanges in the world, and they tried to look at how market operators react during the World Cup. So what they noticed is generally trade volumes reduce during the 1 month period of the World Cup. In US and Europe, you have about 43 to 35% decline in trade volume. But in South America, where people are really crazy about football, in some markets like Chile, you have about 99% decline in trading volume. And one of the discoveries they also made during the study was that when there's a goal, there's a 5% decline in volume is higher by 5%. So we take a look at what was happening in Nigeria in 2010 and 2014 as well. I will notice that in 2010, there was about 25% decline in trade volume. In 2014, we recorded about 34% decline in trading volume. Also, we look at what has happened between 1998 and 2014, the last 5 World Cups. And out of the 5 World Cups, the Nigerian market gained about 3 times, while there was a decline in 98 and 2002. There was no, it wasn't 2002. I think it was 2010. We recorded 2.3% and 3.1% decline respectively. But between 2002, 2006, and 2014, the market was actually very, very upbeat during the 1 month period.
So you had actually projected that this week we should react, but the market should react positively to the market and of course to this kind of the tournament that is ongoing. But yes, the market as at the time that Nigeria played,
the market has already closed.
Market has already closed. But so what do you expect to now happen next week?
Okay, so if you look at the numbers of the uptrend we've seen, it looks like there's a 60% chance. 3 times out of the 5 times the market has been up. So if the correlation is anything to go by, there's a chance. But don't forget, it's a correlation analysis.
Yeah.
There are actual impacts. For example, what we've seen in the market over the last 2 months period is volatilities in the global economy affecting investors' decision. Between the week before the public holiday and the last week we just ended now, we've had rate hikes in the U.S., and a lot of trade tension between the U.S., India, China, Euro, creating a lot of volatilities, and investors are worried about what the impact of this higher tariff will be on revenue and bottom line numbers of these large corporates that are listed across these exchanges.
Yeah.
So that means that if it's going to affect them poorly, then they will also pull back on their investment and think of what else to do with their funds. So I think it's also filtered into the African market as well as Nigeria. And we saw what happened last week, more than 2.7% decline week on week.
Okay, so still with football now, and I expect a short response to this because I know the NASD-OTC has been trying to list some of the local football leagues to make them tradable on its own platform. What does this tell you about the kind of sentiments that investors and Nigerians, the footballers all together have around football as a religion?
Well, I mean, I think Nigerians should pay more attention to football. I think that's one unifying factor in this country. When we won yesterday, nobody was talking about tribalism or religion. Everybody was just hailing Ahmed Musa. And, I mean, the entire system was very happy. I think it's something we should look at. So
before we turn capital markets into a football analysis session, let's now go to the OPEC decision and, of course, the fact that Nigeria has now assented, President Buhari has now assented to the budget. What will be your projections for capital markets, the debt and equity market next week?
I mean, thank God the budget should be up and running now. I mean, although there are issues here and there, but the fact that we now have a budget means that the market should cheer. Activities should start happening faster across the economy. And for OPEC, I mean, they've implemented about 1.5 million barrel increase, right?
Yeah.
So, I mean, it's not much of a change, but it also means that we are likely to see sustained stability above $55 to $60 per barrel oil, which is okay for Nigeria. So, I mean, we should continue to see improvement across our key macroeconomic variables. That should be positive for the market.
So one of the points here to note is the fact that, yes, you mentioned the trade wars concern, and now we're seeing OPEC decision coming in with 100% compliance as against 152% compliance. But this should be driving up the price for crude oil, and that means more money for Nigeria. Does it send a good signal to us getting more offshore investors back into our portfolio, to the markets generally, especially portfolio investors?
Well, definitely, the oil and gas is a space that investors will continue to look at in Nigeria, looking at the size of our reserve. But of course, getting further investment is a function of regulatory issues, especially the PIB that we've not yet got up and running. Until investors are sure as to what is going to happen to that bill, especially this fiscal bill, I'm not sure we'll gain as much traction in terms of oil and gas investment in Nigeria.
What aspects of this PIGB is really the drawback now?
No, PIGB is just one aspect of the PIB. The PIB is, is a massive bill that includes the G part of the PIGB is the governance, which is more regulatory. But the fiscal bill, the one that talks about taxes, the one that talks about, how much tax many of these investors will be paying to government and how all of this will be operated, is the key thing that, many of these offshore investors want to know what is going to happen to, and they are really concerned about.
So are you saying if we have PIB, election or no election, markets will continue to trend up?
Well, for election is always a negative, but if you look at the way things are panning out going forward, it doesn't look like the election risk is going to be as high as what we had in 2015. So if investors take a long view enough, I mean, election will come and go, but I think this democracy in Nigeria is getting much more mature.
That will be a good discussion for another day. Thank you very much, Wale Olusi, for giving us a good time of your weekend this time. We appreciate. Wale Olusi is a research analyst with United Capital, and that's one of the listed companies on the Nigerian Stock Exchange. Well, that's the show for this weekend. Thanks for watching. I'm Temple Ashaju. I'll see you again next time. Bye for now.